I think silver is going to stand out among markets this year in terms of percent gain, percent movement. Yes, gold is the mama, as I always say, and it holds the leash, but silver is the wild dog, and when it runs, it can run, and both downside and upside. As we've seen, since the summer 2020 peak in silver, it dropped to almost $17.
Yeah.
That's back in September. Now we're trading, either side of 24 for this is now the 7th week, either side of 24, just below 25. In fact, we've had two highs recently at 24.70 something and 24.60 something. Well, that's very interesting from our perspective at Momentum Structural Analysis, because various metrics we look at, including price, actually, in this case, we see that getting above 25 could be a point where you really engage. And now we've already, pretty much engaged pretty strongly just since September low. I mean, you went from 17 to 24.70 something. So that's, a huge percent gain, beat gold. But it's still not back to its highs. Like gold basically is back to its highs. Gold's, for example, its peak monthly close. There are two peak closes in gold over the last couple of years. One was in 2020, one was in 2022, March 2022. The monthly closes were 1970, and I think the other was 1960 and change. Okay, our recent traded high is 1949.8. So we're 1% below engaging a new high monthly close for gold in history.
Yeah.
Nobody on CNBC is pounding the table about that.
No.
At some point they will. But as gold has re-engaged itself after stopping out a lot of people by popping through a false floor on price, and silver done the same, I think they've re-engaged back to the upside. We're very positive right now. We're not waiting on this last signal. But I think that last signal, silver getting above 25 by some credible amount, 25.25, for example. We've got one number next month. It's going to be 25.15 to be precise, just traded. Now I'm using the March contract, front month active future. I think silver could lock and load, where instead of fighting its way higher, it goes whoosh, and suddenly you're back to and above 30, which is an obvious price level for anybody just looking at a price chart.
Sure.
You see these two peaks up there at $30, and they go, we've got to get through that. Well, you could wait for that if you want, but I'm telling you, get above 25 by much, you're probably going to go through that. And I think that when you study silver going back 50 years and gold and compare them, a spread basis, what's silver price in relation to gold? Silver's still very undervalued compared to gold. And technically, when we plot that spread relationship, month-to-month closes, and then run a momentum study of it, it's now back to positive trend, meaning at the end of September, we issued a report that said, okay, silver's now shifted from an underperformer to gold to an outperformer. And sure enough, since September, what's happened? Silver's gone up a lot more in percent terms. We think that will now continue. Usually when that spread favors silver, it means it's a net price uptrend for both metals. And what that spread is saying is, yeah, you're in an uptrend now, but silver's going to lead that uptrend. So anyway, I think in 2023, we could see a very exaggerated advance in silver.
Yeah.
Very much.
Well, so $30 might be the interim, the target, the next target then?
Well, no, I think that's, if you get above the 25, I think you could just simply zap back to
whoosh.
and probably above that level before you even take a breath again. That's what I'm saying. So far, really, if you go back and look at the lows and try to find a sustained pullback to sort of get in again, if you got out, you really haven't had one. You've had a couple days where you'll drop a buck and a half, and next thing you know, you're back at the high again. There's no real gentleman's entry. So if you got stopped out of silver, or if you're not long and you suddenly want to get long, you're not being given the opportunity. No gentleman's entry point. And I don't think you're going to get one. I think you might get one if you go past 30, maybe then it'll pause for a month or two or something. But in the process of going from that fake out bear trap low to and through the highs could be very quick, especially when you get above 25.
Yeah. Yeah, very good. Well, yeah, as you say, that gold is near its all-time high, and yet nobody's getting very excited about it. I guess maybe a lot of people are detracted by Bitcoin. Maybe we'll get your views on Bitcoin, but the gold shares haven't kept up at all. It seems generally they have not kept up with the metal, with gold. What are your thoughts about GDX or some of
Well, yeah,
the major gold producers?
if you measure them by looking at a price chart and say, okay, GDX, for example, a very popular ETF, gold miners and silver miners, made highs up above 40 a couple of times. Got one time above 45 even. But let's say above 40, it got up there 3 or 4 times in the last couple of years. And then the recent low was down near 20. So it got cut in half, while gold had a 20% pullback from its top tick to its low tick. A 20%, about 21% drop, which was quickly erased. The gold miners have zapped back up to where they're now in the 32, 33 area on GDX. So they're like $12 off the low. Well, yes, we're not back at the high. So when you look at the highs we made last couple of years, GDX looks anemic compared to gold.
Yeah.
But if you measure from the low, and you take an GDX from just above 20 and you take it up to 32, you're talking 50% plus rally.
Yeah.
Gold didn't have a 50% plus rally from its low at 1613. It
Right.
had a $300 rally, but that's not 50%.
Yeah.
So on a percentage basis, the gold miners, though they look on the price chart like, oh, they're not back at the percent gain from that low has been much more dramatic than gold. And we think that like silver, the miners are a better place to be than gold is.